Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Mr. Felix.
My man, how are you?
Good. How are you?
Good. Doing good, man. The week went by pretty quick. It's been a crazy week. It's been a crazy week. I got to tell you, the market is keep saying it's evil. This is the evil side of the. It's always good on one side, and the other side it makes it a little difficult. And sure enough, even when you have a good idea of where something's going, Monday was a big a little chink in the armor where the market just went straight up all day, and then the next day it just collapses, very difficult. So it just makes it very, very hard to try to day trade this market and try to pick the directions. I think you could see that just by looking at the volume and looking at how things are moving. I think you can get a read on that as well, and I'll show it to you later if you want, how people are getting messed up. That might be good to save that towards the end. But yeah. I wanted to, I sent you an article that you could show people. I wanted to show this. We talked yesterday about the Chinese names that all ended up on the OA board. Obviously, there was something going on. I didn't see it at the time, but right afterwards, I was very interested in understanding what was going on. And I thought it was really interesting. The Chinese tech giant Sync on report China is considering a state-backed company to oversee tech data. Okay, wow. So that means basically they want to control everything. They want to look at everything. They want to control everything. They want to see all your data. Whatever it is you got, you're dealing with even if you're a Chinese company, you're dealing with, Prime Minister Xi's his country. He's the CEO. He's the CEO of China. It's his customer, right? The Chinese people are his customer, not your customer. You're just someone that's actually messing around and making a little bit of money for yourself here. But that's really my customer. And so I want the data for my customer. And I think it's important to understand that article. And again, I'm trying to show you, this is a long game. This is not something that's going to happen immediately, but I'm trying to show you the chess pieces that are being moved around. And China, again, over the last few months, they told Tesla what? Operationally, you need to improve. I'm not sure I like it. I'm not sure, go back to the drawing board, come back to us. One. Two, they said to just the other day to the defense, people working in the defense in China, you can't own a Tesla. You just can't, because you know what? They got video cameras, they got audio. Who knows? Could be used for spying. Elon Musk says we would never do that. Obviously, China is important to us, right? Nobody can buy a Tesla. No defense person can buy a Tesla. I don't understand why. I mean, all the Chinese names were down yesterday, but what's interesting is that, at the end of the day, the Tesla story incorporates China. A big part of it. The only way they're going to get the 5-10 million cars is if they're selling a lot to China. And they're going to want Tesla's data, right? They're going to take data from everybody else. They're going to say, I want your data too. At what point does China do that? Same thing with Apple. Same thing with any of these bigger names that are in there that actually have the ability to collect real data, get inside the home. I think of Apple computers. I think of Tesla. You're taking the car with cameras and audio into your home. There's an American company that's in, say, millions of people's homes, and the right people, the people that actually have money that can afford these products. And it could be used. If they used as spying in the United States, why couldn't it be used as spying, in the country of China? So I think, I like to think of things in probabilities, and I don't say this is at all is going to happen yesterday, but I'm an odds maker. That's how I look at the world, and I look at the market. And what I would say is that if before that article came out, we said, all right, let's lay the odds. What are the odds that China says to Tesla or Apple, we want your data, otherwise you can't run your company the way you run your company here in China.
Right.
We want to see everything that you got and all your data. You got to open the books. And I would have said maybe, I wouldn't have said 10 to 1. I would have said maybe 4 or 5 to 1. After that article, I mean, it's not a, it's not a, let's talk about 2 years. It's not a 5 to 1 bet. I would take that bet all day. 5 to 1, I'd put some money on that China's going to do something very similar to that, or start making comments about that. And so when you're talking about 5 to 1 or 4 to 1, 4 to 1 is 20% chance probability. So is it a 20% chance? Is it a 30% chance? What is it? To be honest, if I had to make the odds, I'd probably say 2.5 to 1 right now, 2.5 to 1, which is pushes the odds up at 30%. So if you have a model, how important is China to Apple? It's really important, really important. And if they start squeezing what Apple can do within their boundaries, within their borders, what does that do to Apple if a large part of Apple's story is that China growth? Look, it may not crash Apple, but at some point in your models, in the Tesla model, you have to start taking into account these probabilities that this may happen. And that's that is the problem with these 5-10 year growth plans, or plans that people come up. And the problem I have with, Kathy Woods is 3,000 on Tesla. It has to sell 5 to 10 million cars. But what is the probability of, maybe she's doing it? I haven't seen the model, but I suspect that there's a lot that can go wrong within 5 to 10 years. And so, I would take a look at that, especially if you're trying to put pen to paper and look at the actual valuation. You want to hold Tesla forever. Forever is a long time, and a lot can happen in a long time. In a long time, so that's something to think about. Something that I thought was really interesting. They came in yesterday hard on the Chinese names, but some of the names like Tesla was only down 3%. I just thought it was, in general, it was an interesting article, and people should sort of understand and look at these chess pieces moving across the board.
Definitely.
Yeah.
Let me get to, let's celebrate a victory first. ARK was a great winner.
Good.
For most people, I guess some people are saying they got out at 11.50, which is great.
Good.
And that ties into my question, because I was looking at it pre-market, it was moving a lot.
Yeah.
And I was thinking, it's probably best for me to sell, 1/3 or half of my position right from the get-go, because I know volatility is going to be high. It's going to push that price up high, and I'm going to have a chance to sell probably a dollar more.
Yeah, so here's the beauty about winning with puts. When you win with puts, you win 2 ways. Okay, you win with the direction. If you get it right, you win with the direction. And 2, the volatility goes up, and usually there's an emotional grab for these puts. Like we saw this morning, right? And so, the idea is that, look, if you didn't sell it yesterday and you woke up today, my job is to get you to that 100%. That's what I'm trying to do on each trade, and we're trying to risk manage the whole process. But if you wake up and you blow through 100% and it's going through 175% today, you know what to do. There's no, we're trying to take the emotion out of it and saying, oh my gosh, the Tesla's going to crash right now, or ARK is going to crash right now. They look awful in the pre-market. It's down $3-4. That's really not what I want you to do. I want you to look at what you have and say, okay, this is going to hit right around here. It's going to hit, looks like at about almost 200%. And I haven't taken anything off. Maybe I could take off half or even 2/3 here on the open. And then I'm going to get on my calls. And if anything is stopped, I want to make sure that we're, reducing here, any trailing stops on longs. Like this is how you have to be thinking, not, oh my God, where's it going to go? Nobody knows where the market's going to go. And in fact, I spoke to you this morning. I said, watch out for the biggest screw up and that they're going to try to do to you, which we can talk about it. Exactly how they do it, why they do it. But, the idea is that there's going to be people reaching for puts on the open. Why? Because the market's down, ARK's down 3-4%, and people are bailing out of the stock. Applied volatility's up. And so my boss used to say, I used to laugh every time I say it. He used to say, when the ducks are quacking, you got to feed them a little bit. You got to feed them a little bit.
Yeah.
And I didn't understand that as like, what are you talking about? But and I'm thinking, I remember he left the room and I'm thinking, ducks quacking. And I'm like, oh, he's selling them a little bit of like whatever he owns, right? He bought it first. Now they're all like clamoring for it, sell it. So, when I see that, I say in my mind, I don't know, I'm programmed to think the ducks are quacking. So you got to give them a little bit. And and it should feel good. I mean, you should feel good that you got out of some. You know, it's okay that you're still in it. You might still need those puts. The game's not over. I mean, you got plenty of time, and this game is this market is fairly evil from what I see. So you have these puts. You took some money off. You're still have some calls. You're trying to manage the back and forth, and we're trying to take the emotion out of it. We're trying to what we're doing is slowing the game down. So for you, it should be slowing it down. You shouldn't be thinking where anything is going. You should be thinking, what's my plan? Where are my stops? Where are my exits? And let me just pair, if I can take some money, that's the goal. Okay. That's the goal. So, so, I mean, good question. It's good that we're, that was a winner. There's some, again, people on call. So those are going to be off. But the idea is that, we have two sets of puts. They're fairly close dated puts, which gives us what's called gamma, which gives us leverage. So if the market decides that it wants to turn today, like it's turned the last couple of days, and starts going back towards 380 tomorrow for the close tomorrow, which I suspect there's a real chance that it could. I would say that you're going to be there, and if you have two puts on that make approximately 200%, that's a lot of losers that you can take off, right? You could take off, four losers at 50% is one winner at 200%. And so, you can, two winners of 200% with two puts knocks out 8 losers, and you shouldn't feel bad about that. In this month, even in February, I'm happy to break even. I'm happy to, play the game back and forth. December, there's let's call it what it is. December, January, people might have doubled their accounts. It could have been easy to double your accounts with the winning picks. Okay. So December, January, people double their accounts. Months like these are the hardest months. You break even on a hard month, man, it's a home run. You win. It's, because we're going to hit it well. We're going to hit it well at some point, and in those months, you're going to make a lot of money. And in the other months, you know what? We're trading it back and forth. We're using a process. We're mitigating risk as best we can, and we're going to take our lumps, and we're going to take our losses if they come. And we're not going to, cry about it. We're not going to say, oh, but I still like it. I love it. And if you played with patience and you did only 2/3 and you're not stopped, great. Put it at the end of the line. Don't look at it. If you are in a full position and it's stopped, you don't need to ask me. I'm going to tell you, get the hell out. Get the hell out. I had FOMO in the beginning. Okay, just get out. Patience pays. So when you start using patience, you start feeling better about yourself, because you're like, I would have gotten stopped out here, and I don't even have to look at it, and I could just watch. Meanwhile, my puts are going up, and I can actually get out of some of those. So these are the lessons that I know you're learning, because you're constantly asking me on the side, what about this? What about that? What am I thinking? So for everyone, it's you break even in this game buying options for the month. It's a win. It's a home run. The amount of leverage we're taking, it's a home run. If you're even down 10-15%, it's still a home run, because the months that we win, you're going to hit it. You should hit it pretty big. And I'm talking about the big months. Every year so far in the last 2 years, we've had several months per year where you could have made 100% ROI on that month's investments. Okay, it's hard to lose when you're winning 3 times like that a month for the whole year. That means 9 months, you might break even, give back a little bit, but that's the game. It's a probability game. And we want to be there for the big months, and we want to, scratch and claw on the other months. We just kind of, even if it's a break even, it's totally fine. So that's what I would say. These last 6 months have been very, very difficult. I'm sorry, the last 2 months have been very difficult. The choppiness, going up 5%, down 5%, up 4%, down 4%. We needed to go up 5, and then come down. We need that last thrust in order to win. So I would say that's what I would say on today's exits.
Cool. Good. Now, let me ask you, and I'm sure this is a burning question by everybody.
Sure, go ahead.
What's going to happen with SPY? I mean, you don't know, right? But have you spotted some trends? I see it go up and then go down, and then go up and go down.
So what I would say about this, here, I'll show you quickly. The amount of day trading that's going on in the SPY is tremendous. It's tremendous. So we look at tomorrow's options, and this morning we were here 384, 385, 386, and you see there's 200,000, 350,000 options, okay, here that have traded 400, maybe call it 500,000 options that have traded here in the morning, this morning. Okay, it's a lot. This is a lot. This is a lot of day trading. This is a lot of in and out, in and out. What happened was, as the market looked like it was teetering, there was a lot of buying. So the market allows all these day traders to buy. People are buying puts, buying puts, buying puts. And I told you when we were literally right here in the morning, because we started talking, and I said, watch what they do. They're going to try to rip this all the way up first. The most evil thing, I always think, this is what I think. What's the biggest prank I can play on the market? The biggest prank I can play on the market is let them buy everything here. Okay. And at the time, the 85 calls were $1.60. The 86 calls were no, I'm sorry, the 86 calls were $1.60. The 87 calls were about 90 cents. And I said to you that it's likely that they will take the stock right around 384, 385. It's likely they will take this stock and make a run for it, make a run for the moon. Why would they do that? Because they want all these day traders. They can't crash the market when there's 500,000 options there waiting like this, waiting, pay me, pay me, pay me. They can't, the market's not going to crash with 500,000 options just waiting to collect money. It's just not going to happen. So what the market has to do is has to get rid of all those people first. Right. And if you look at the last 3 days, that's what it's done. It's literally gotten rid of all the put buying that happens in the first half of the day, even towards 1, 2 o'clock. And then at 2 o'clock, 2:15, 2:30, it starts rolling over. And it's done this for the last 2 days, which is new for the market. Usually at the end of the day, you see the spike up, but this is fairly new and it's caught people by surprise. Does that mean that it stops today and today it actually goes up? I don't know. But what I do sense, and I've been watching this, is that the TLTs have been bid. Okay. The bonds have been bid, and the SPYs at the end of the day have sold off. And so I'm thinking that, that trade is what should happen towards the end of the month. The fact that it happened at T-6 shows me that maybe someone is that big in this position that they have to get into, that they're actually starting 6 days before. And then on T-5, they did it again. Right at the end of the day, they were selling stocks and they were buying bonds. Okay. Are they going to do it on T-4 today? This is something where I think that you have to think and consider, how is this person who has to sell maybe $120 billion of the market in equities, how's he going to do that in one day? He can't. So he starts doing it piece by piece. So is this a tell? Is this, something that we're going to see again? If I see it again today and I'm looking for it at the end of the day, I'm looking for what happened right now. They've all bought puts. By now, every day trader has actually sold those 84s, 85s, 86s. Maybe they rolled up a little bit. And by the end of the day, maybe even to be really evil, the last 5 minutes, they take it down, 2 points. And then everybody's like, oh man, should I buy puts for tomorrow? I'll wait till tomorrow. And then maybe overnight, it's down 3 points. This is evilness. It's hard to catch these things, and it's hard to stay in. If you're going to do this type of trading, I suggest right now to be much smaller size, so you can stay in the trade longer. If you usually trade $1,000 every time you're doing these types of trades, I would suggest go down to $500, $600. Okay, reduce your size, because the market is going to stop you out. Okay, so that's a very important lesson, and I suspect that people who are day trading this market are learning that lesson the hard way, because if you're still trading the same size you were trading before, you're going to get killed. You're going to get absolutely annihilated. Volatility is higher, which means your stops are going to get hit faster, which means you have to lower the position so that you can withstand some of those losses when it goes against you. Okay.
Yeah. Definitely.
Awesome, man. Awesome. So all right. So that's sort of the end of the day sell-off that we've been seeing. Let's talk about a couple other names that UOA. Let's jump into that.
Okay. Yeah. Let's jump into Nikola and this one more
Nikola.
EV name. Yeah.
Nikola's still around?
Fighting.
Barely. Oh, there you go. Nikola. Nikola. Talk about good branding, right? That commercial. I don't even know what it is, but I hear that the guy yodeling, Nikola. Do you know that commercial? How do I know it? I don't know. I think of it. Okay, what's the symbol of Nikola?
NKLA.
NKLA.
Mhm.
Is that right? Oh,
Yep.
okay, there we go. Okay, so I mean, it's clear. This is what 90% of the stocks are going to look like. It doesn't matter that it's Nikola or anything else. I mean, it's clear what this is. You see this? This is trades 10 to 15, 10 to 15, and then literally goes from 10 to 15 to 92 in 5 weeks, 6 weeks. It's crazy. And then spends 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months coming all the way down. So this is what I call the mountain. This is what I'm warning you about all of these stocks. Um, what happens when you're on the right side of the mountain, everything becomes this is a pipe dream. This is when it's doing this day. It's oh my God, it's going back to 90. This is the breakout. Then it drops, gets cut in more than half. I know they had problems there with the GM thing but this is what seems to happen with these names, and I think you just got to be careful on all of these names. Again, I think 90% of all of these names that have done these types of moves, 90% will trade under $10. I don't care where they went to. I don't care what they are right now. I think 90% will trade under $10 or right back to where they originally started, 10 to 15 bucks, somewhere in there. But, yeah, there's going to be a couple of winners that stick around and never make it and hold and keep going. But by the time it's all over, you have this. This might as well be NASDAQ 2000. This is how it traded. Every time it popped up, people jumped back in, volume came in, and then they took it lower. And it's something to be very careful about. So what are they doing? Buying calls?
No, actually puts.
Oh, even better. They think it's going to zero. I mean, how do you like? There's still. So that's the beauty about shorts, right? When the shorts get hold, we talked about the shorts on this side of the mountain without repeating everything. But when the shorts get a hold of a stock and they think it's worth whatever they think it's worth, maybe they think it's worth $2 or $4, they press until they just keep pressing and pressing until somebody tells them they're wrong.
Right.
Now, a lot of these guys, unfortunately, they get killed if, again, this is just from watching, the hedge funds, they start shorting at 100 and you short 1 million shares at 100, it's $100 million short. And then it gets to 50 and you're right, but you think it's going to zero because you think it's fraud. So at 50, what happens? In 50, they get more confidence because it's down 50%. It's actually on its way to zero. So now to get that same $100 million position, they have to double the size of their trade. Okay. And then at 25, they're right. They got to make their trade 4 times where it started. And then at 5, it's 20 times. And they keep pushing. But if they happen to be wrong, like GME, they're now 20 times as big as they were back when it was 100. And, just a double from 5 to 10 ruins their whole P&L for that trade. So there's the guys who buy stocks in the market, and they always get confused by sort of that mentality. And the shorts are very aggressive. They get very aggressive when the stocks start going down and they start loading up. So this is someone that is still loading up on puts, and you got to buy more because the puts are only protecting which ones are they buying here? Mace.
Yep.
They're only protecting $12.50. So 12,000 options times 12,000 options, 1.2 million. 1.2 million times 12.5 is only a $13 million short for a big hedge fund. That's nothing. So they just got to buy more and more. Let's just check to see if this was a real buyer. Yeah, I mean, it looks like a real buyer right off the bat here. Let's see here, 163, 65, 69. Yeah, the IV is going up. Okay, so this is a buyer, and they're buying Nikola 12.5 puts, and it looks like they're targeting earnings. So they want to make sure they get that announcement. And what are they targeting? It's got to be something like 7, 8. Okay, 7, 8.
Yep.
Okay, let's call it $7-8. And I mean, they're looking for a break here. I mean, you can't even look at the chart well because this down here is $10. So they're looking for a complete collapse at $12.5. Man, I don't know. They were talking about fraud here and the CEO and how I just remember part of the story where they rolled down the truck. I think this is the name. Is this the name where they rolled down the truck down a hill and they filmed a commercial, and this commercial was like mind blowing. Did you see this? Do you remember this?
Nope.
There's a big Mack truck, huge truck, and it's flying down a desert road, and it's like they're filming it, and it looks incredible, and you're like, wow, like EV Mack truck, like blows away Tesla, right? And then someone figured out, this is where it got a little fishy. Then someone figured out that they basically pushed the truck down a hill in this desert area, down one of the hills, and the truck had no engine, and it was just a driver driving the truck with no engine, just because it was going down a hill and flying down. Incredible that, like, you know, they didn't tell people that, but people started saying, hey, look, I know that hill, it's a desert, it's in like Arizona or Las Vegas, wherever it is, and they just pushed it down the hill, and that's what made it go. So they didn't even have a prototype yet. So maybe they do now. You know, it's one of these names that when you're doing that and you're trying to pull it off that way, it says something about management, about the corners you're trying to turn. You know, the stock was valued at billions of dollars. It's not anymore. GM was going to be part of them. It's not anymore. I don't like that, but I get the reason why a short seller may not like that. So that's all I'll say about Nikola. I mean, it looks like it's going to break. They're trying to break it here. So
it ties in with this Hyliion. How do you pronounce it?
Oh, another one. Hyliion.
Yeah.
Yeah. Hyliion, I know too. They do tractor trailers too, actually. So it's interesting that two tractor trailers. Hold on one second. Let's get out of this one. HYLN, right? I think HY.
Yep.
Sorry, HYLN. Let's take a look here. Number 2. Which side of the mountain we on? We're on the wrong side here. So it goes from 10 to 58, and then just spends its time over the next, let's call it 5-6 months, kind of heading lower. They're buying puts on this one too?
Nope, calls.
Calls on this one. Okay, we're back. They're back in business. They do Big Mac trucks. I think they have a battery system too that they wanna sell, if I recall. If they can't sell the trucks, then they'll sell the battery systems. So let's take a look at which ones are they doing here.
I mean, it's kind of silly, but they're doing April 12th.
40,000. Okay.
Yeah.
April
1st. Sorry.
April 1st.
Yes.
Oh.
$12 calls. Yeah.
26, 34, 35, 32. Okay. Yep. They're buying. Okay. You know, I don't really like the 1 week. Now this is basically 1 week, next Friday. I don't necessarily like 1 week, but I mean, I have an open mind when someone shows me this. Like, why is someone picking April 1st? So the first thing I would ask you is to go look for an event. Tell us what's going to cause Hyliion to run up next Friday. Does somebody know of an announcement coming out? Is there an investor meeting? What's the move here? Why is somebody doing that? To buy that option at 33 cents, you know, you got to believe, let's call it 14, 15. Yeah, 14, 15 bucks. So why are they doing that? That would be the big question. I don't see anything popping out here today, but I would say this is, it's intriguing, to be honest. It's intriguing because of the amount that they're spending. You know, they keep buying it. It's about $1 million so far. I'd cut it by a third, just because it seems like probably a lot of people will be following this. It's a 1 week option. It's 30 cents. People think, it's an easy thing to buy.
Right.
Let me just see. I just want to see the maze because there's earnings here. You know what? I mean, I think I'd rather, if I was going to get long Hyliion, I mean, I'd probably look at the 12s here for $1.20 and give myself 2 months plus the earnings, as opposed to reaching right now for these April 1st, which is 1 week calls for 33 cents. So, you know, another 90 cents, and I get to watch for 2 months a name if I really like it. That's seems a little bit more reasonable. And on this, if I'm thinking 14, you know, I got to be able to get 16, 17. So 16, 17, but the vol's a little bit high going out that far. So I would say 16 bucks. $16 gets me the option worth around 370. So it's about it should be about 231. Okay. So that's what I would say. I mean, I would go out a little bit further. It seems, unless they know something, and they very well may, you know, I would have to look into that. So that's what I would say there. But
Okay.
I think the point is that, you know, these things, people are looking for the glory days again here. And, you know, stock market doesn't care about what happened over here. It's basically
Right.
saying, you know, we're getting back to reality. You know, this was a $10 stock SPAC, and, you know, it's going to be here, and maybe it was overvalued coming in. So I'd be careful again on all of these, every single one of these types of names. If anything, I would look for real companies, real revenues, real earnings, real everything real. Show me something real now. Anything on the come is it's fantasy land. So just be careful.
Well,
Just be careful. Okay.
let's then talk about real, and we got another one that's a put and a call in banks: Morgan Stanley and Goldman Sachs.
Okay. So okay, so let's take a look at
Let's do Goldman first. On.
Goldman.
Yep.
So Goldman, all these kind of trade together, which is interesting. So this is a great chart. I mean, this is a really nice looking chart. It's kind of, let's frame this a little bit. I mean, there's not much to frame because it's just going to be one line. Basically, it's here, and let's call it here, right? This 245, 255 mark, somewhere around there. Okay. This was a medium. This is a little top right here, and now 355, 36. Let's call it 305. So this is about $50. This is about $50. See the pattern there?
Yep.
50, 50. Okay, right around there. And, you know, 310 seems to be the spot. I suspect, just guessing, someone is trying to buy puts, is my suspicion. Is that right?
That's right.
I mean, after a move like this, it's, you know, you're talking about, you move Goldman Sachs from 190 to 355 in 4 or 5 months. That's a long way up. So my suspicion is that they're trying to buy some puts just to protect some of those gains. Also, which ones are they buying? Let's take a look.
Yeah, take a look. April 16th. It has earnings and 300s.
April 16th, 300s. Okay. So buying 5,000 here. Buying 280. Okay, buying 5,000, 4,200, 5,000. Let's call it 5,000 at around 280. So they are on a risk reward basis, let's say, let's call it 280. Let's see what happens. 280. All right, 275. Let's call it 275. Right around 275. So paying 230. Let's see this now. It's a little bit too much. It's a little bit too much. There must be a dividend in there. So let's look at this. Let's raise this up to, if I'm going to buy the 300s, it's just so far, it's far enough out of the money that it's making the percentage returns, the actual percentage returns, sort of, it seems pretty high. It's a 17% probability of being in the money. So it's already a little bit outside the grand scope of things. I think, to me, it looks like someone is trying to use that maybe just as a, you know, over the next couple of weeks as a placeholder. You know, maybe they're selling a little bit. They know they're selling. Somebody like, I want to say maybe like a BlackRock, who's saying, okay, let's get out of some of these things. And it's very low relative to where the big guys are generally buying. So it might just be somebody that's saying, you know what, I'll lean against this if I buy these, and then, you know, I'll pay for stock somewhere around the, you know, for somebody to buy, what was it, the 300s, 280s?
300s.
300s. So somebody would buy the 300s. Where are we? The 300s and pay two and change. You know, you're talking about them thinking to protect, let's call it down here, somewhere in this vicinity. I think there should be buyers somewhere around here, 310, 315. It's way out of the money, way out of the money put. So I'm not sure that it's like this person believes that it's going lower. The banks have been bought. We talked about, so you see the banks rising here. We talked about yield curve over the last 4 weeks. You know, again, the backdrop is, let's talk about the TLT. The backdrop for the TLT let's look at a daily. You know, we've been looking for this pullback, and you had the last 5-6 days where the market's kind of done this here, and I think that by next week there's a possibility it could trade even to 140, 141 if this rebalance comes in. So bonds up, interest rates down, yields down, banks would probably trade lower. The news that there was a Japanese commercial bank rebalancing that actually took this down could also be weighing on the stocks, because part of the reason why the banks were trading so well was because, oh my God, the yield curve is so wide, right? That is so steep that the banks are going to be making a ton of money. But if that was caused by just some Japanese trader who is actually selling bonds and it's going to come back down, then people might say, well, then the story of them printing money forever is not going to be as good as it was. So maybe it comes back in. So, you know, it depends. It's very bond related, yield related, because that's how the banks have been trading. But Goldman Sachs, great chart. You want to buy in a pullback. That's a way out of the money put. I'm not sure I want to jump in there and follow it. I'm looking to buy calls when it pulls back.
Okay.
What's the other one? Morgan Stanley?
Yep.
This one's interesting. What is here? Calls?
It is calls in April. Yep.
See, so this one to me is a little bit different than the Goldman Sachs. Like you see how the Goldman Sachs was Goldman Sachs seemed a little steeper here. It looked like it was, let's call the percentage 150, 60, 70%. Let's see here, 50 to 80. It's about the same. It's about the same on a percentage basis. This one just looks healthier to me. It looks like it's sort of hitting the right spots when I look at this. The one problem that I see on these things, and again, it's going to be the yield curve is, I see this, let's call it this right here, this gap, but also here, okay? And then we can call it sort of something around here, okay? So you got 54, 50, 64, 66, 76, and then 86, somewhere around there, right? And what I'm thinking is, yeah, there should be some buyers here, but again, I'm worried about this next week where yields actually come down in this yield curve, and then the whole story in the banks changes. So I'm a little nervous about that story, right, with the banks, and I want to see how it plays out. But here's something else I want to show you. So again, here's that catches my eye. Here's price high, MACD, right? Here's MACD, price high. So this makes a thrust, MACD up. This makes another thrust, MACD makes a new high, new price high, new MACD high. Now it makes a third thrust. It's a price high, but look what happened here. The MACD is not at the highs, okay? And so you have this high, and then down. So this is a diversion here. You can also do RSI, where the RSI is, you see this high up here, high up there, and down. It's a little weak. It's a little weak on technicals. And so I suspect that, we have to let see this play out. And I think, again, this yield curve talk and the bond curve is going to come into play with these banks over the next week. I think you'll start seeing more and more news about that, especially if, remember, this TLT is heavily shorted, right? The bonds are heavily shorted. And again, if they were just going in front of a short, they're heavily shorted and they're going in front of a short, and everybody's got to eventually come out of them. You could see this thing come back. I mean, this is again, Japanese traders selling short. Once it breaks here, you got the CTAs, the basic momentum guys that start piling on, and they start pressing until until whoever's selling stops and then the buying comes back. I suspect this is what I'm looking at. I suspect 137 gets you somewhere towards the 143 spike, somewhere around there.
Right.
Just a guess, just me looking at it saying, I suspect this is what might happen in the next couple of weeks. That might hurt the bank. So those are the two brokers, Goldman and Morgan, opposites, which is interesting. But I think the Goldman, not sure, it traded very well. It's got a lot of different levels to break. I'm just not sure there. What else
Why don't
you
we
got?
take a look at Morgan on the options chain?
Morgan Stanley?
Just real quick, yeah.
Yeah.
Just to see what it is.
Which ones?
April 1st.
Okay. April 1st or April this 20th?
First,
Hold on one second. Okay, hold on. This 20s. Hold on. April 1st, huh? This is more like trade. When you look at these, it's almost like it's just trading. But the 80 calls at 9,000. Yeah. They bought these?
Seems like.
Let's see here.
But I'm not sure.
Yeah.
And it says they're a spread as well.
Spreads here. So it's spread with. What did it spread with? Maybe it's spread with something over here. '80s. Yeah, it looks like that's the spread right there. Yeah, 2,400. Okay, spread. So it looks like they might have 33.5. It looks like they might have just got out of these. The April 1st. I think they would have bought the April. I think they would have bought earnings. Not sure, but it looks like to me like these were.
The April 1st looked like it's a 80-85 spread, right?
Yeah. But there's also a spread there. There's a spread here as well. So the April 1st here, let's take a look at this. This is okay, 80, 85, 6,000. I'm not gonna overthink it. I think it's the Morgan Stanley chart. We just showed it to you. I should have left it up there, but we're here, right? We're here, and someone's playing $1 to buy that right here. This a move back from 79.80 to 85 for $1. It's not terrible, but that's what they're playing. It's more of like a trading. Someone who likes the name. He's basically, you see this right here.
Yep.
This should sort of held here. This is the high here. Somebody's looking 80 to 85. It looks like, it made its move down 78 here, 78 here, and they're trying to play just a bounce back, maybe to a couple of points.
Cool.
Just trading, I think. I don't think it's anything that it's, I think it's more just trading.
All right, fair enough. Let's look at gold now.
Gold, GLD?
Yep, GOLD. Yep.
Oh, GOLD. Just stock gold. Just stock gold. Gotcha. Yep. Warren Buffett's in this name. So I know this name because Warren Buffett got in the name somewhere around here. The stock popped. Gold has been a disaster, basically, for the last 6 months. Okay, but look, I think all these names, this stock is trading off of, but let's look at just gold for a second. What are they doing in gold? GOLD?
In GOLD, they're
probably call buying.
They are, yes.
Gold is something that's starting to wake people up. Bitcoin down 15%. Probably stole a lot of money from the gold industry. And investors. Everybody's starting to say, "Oh, gold's not the store of value. Let's go to Bitcoin." And gold obviously has not been doing well over the last, again, 6 months. Makes this high here, but you see here it's digested this huge move and it's given back. It went from 135 to 195, which is 60. And 30 points minus 195 is 165. So this is like the 50-day retracement. This is the 60% Fibonacci retracement. It's right around where it should have retraced. You have 1, 2, 3, somewhere like this. And let's see the Fibonacci retracement. So something like this you can do. You can say this is 61, 157.98. So you see how that works?
Nice.
Okay, that's just a Fibonacci. People use that. They just go from the low to the high. You could do it yourself. you just click on any one of these things, any one of these, anything that has technicals will have the Fibonacci. It's obviously something that everyone should at least look at every once in a while. But low to high, 50% retracement was here. Then it bounced, and then it went down. Now it's at the 61.8% retracement, trying to get a bounce. So I could see how people are looking at calls. We have some calls. We're able to take. We have some Newmont calls. We're able to take some profits there and still be long. But I think GLD, all these names, if gold goes up, then all of these names, start making their move. Let's take a look here. Which one is it?
24th in June.
June 24th. These were bought back in the day. Just know that these Barrick calls, these were all bought. As the stock was coming off, they were bought. These were bought. So 25,000 here. They look bought today. They look bought. So yeah, maybe just somebody's doubling down here. But I did some work on the gold. It was one of the names I was looking at, and they were bought, those 24 calls. So I would say that having doubling down here is a good sign. People like the name. Warren Buffett had gotten into the name. That's what caught everybody's eyes on this one. There's several names that are interesting to look at. I would look at, if you like the gold names, Newmont, gold and silver. Newmont is one. Here's another one that's liked by the group, PAAS, Pan American Silver. They do a lot of gold as well. Gold was hot because Warren Buffett came on. It looks a little bit worse than all the other ones. And let's see another one that back in the day. I think SSRM. I think is that what it is? SSR Mining. This one doesn't look as hot either. I would stick with the big ones, which is the Newmont's gold and this PAAS, if you like gold.
Okay, fair enough. Nice.
Good.
Yeah, next up, uranium. Let's look at what is it? CCJ, I think. Yes, that was
still. I actually saw the call. They're still buying calls in this.
Yeah, I mean, we've been talking about it for a couple.
Talking about it for a couple of weeks, and the story is not going to change. So it appears that someone has a better story than everybody else. It just appears that somebody is setting up for I don't know what. I mean, we're looking at the spot rates and that story. It's just that's all I could find. That's all I see. But someone is very juiced up on April options in CCJ. I don't know if there's an options expiration. Someone is looking at their book and they know that billions of dollars come off on an expiration. Somebody knows something about an April expiration in CCJ, or they're trying to set up for something. Maybe call it a squeeze, what they did in silver. Maybe they try to do it here, but they've been buying a lot of these. I mean, you could see 24, 22, 20. These are baby calls, and they're buying a lot of them. And now they came in and buy the 17.5s today. So I don't have anything else to add except that this appears to me that someone has more information than everyone else on why this might actually go up. I think that article on uranium highlighted a few things, and I think that it should be looked at, and we should try to better understand, maybe what they're looking at. But they keep coming for these upside calls, and I don't know if maybe there's a contract. I don't know. I'm guessing, but it appears somebody knows that there's something going on in the spot market. There's someone who's needs supply, and they're paying higher prices, and they have much bigger size than the market understands. They've already traded X millions, and somebody knows, no, the guy actually has billions to buy, whoever that guy is. Maybe it's a government, whatever. But this is something that it's interesting. The stock has been weak ever since he started buying them. So I don't know. I don't understand.
Okay. All right. Fair enough.
Okay.
Before we go into the next two ones, guys, make sure you like the video. We really appreciate your support. It helps us a lot with the YouTube algorithm so we can reach more people. Now, let's jump into BUX.
BUX was a good BUX. There was a research report on BUX. I think 2 days ago. Stock had to move up. They are potentially a takeout name. They do cloud services and whatnot. So what is activist pressure? let's see, who's the activist that came in here? Oh, that's nice. But there's an activist. It looks like there was an activist. I saw that someone came in and they're pushing for change. The analyst said that there's about 40-50% upside in the name. It's interesting that they're coming again into the name. I'll tell you that much. That they're coming again into the. Oh, look at that. That's a decent amount. The 25 calls for 215. You know, it's interesting. It's interesting that that's interesting. It's an interesting development to come in. They're taking the earnings. They're taking down the earnings month. This is interesting. The activist, I want to check who the activist is, but someone coming in, activist is, looking for change. He's probably telling his story now to, now that he releases, hey, I'm in the name, and he's going around telling the story. So usually what happens is once somebody gets in, billionaire gets in and keeps quiet. And then once he has to file and then he has to come out and say, all right, I'm going activist. Now, over the next 6 months, all he's doing is telling that story to everybody else and trying to push his agenda because he needs shareholder votes in order to get onto the board. Activism basically means he's trying to get on the board to affect change. And so in order to get on the board, he needs the support of all the people, all the shareholders, the big shareholders who are along this name. And he's got to get their votes to get on the board. And if he gets on the board, then he can make change for his ideas, whatever the ideas are. Okay, maybe sell a piece of the company, put it up for sale, whatever he wants to do. That's why it's interesting, and that somebody comes in and goes in and buys the earnings right after that. It already made a big spike. So let's look at. I mean, this was up big this week. Why did I do that today? Let's see here. Box. Yeah, the stock traded on Monday. Looked like trade twisted 26.5 and has pulled back here to this level at 22. So yeah, maybe this is a new stock with a new activist approach. You see the volume here, 22. I like that. That one looks pretty interesting to me. Looks like there's a story behind there. Someone is pushing it. And clearly let's look to find out who the activist is, and we'll report back on that.
Okay. All right. Cool.
Good.
Starbucks.
Any questions? Starbucks, or you want a question?
Yeah. Let's do Starbucks, and then we can do a question. What do you think?
Starbucks?
And in the meantime, you guys can post the questions in the comments.
Starbucks, the call buying, there's been call buying. Starbucks hasn't done much in a very long time. So it's on my radar for something that, maybe it's time for Starbucks to sort of get back on its Momo legs. This move right here, and then this move down, and it's 95 looks to be like 95 looks to be a level that it's trying to bounce off of. They've been buying calls over the last couple of weeks, sporadically, not in tremendous size. Are they buying more today?
They are in May.
See something in April too. May. I'd have to check that the 110 calls have 15. That might be just might be a buy to close. Actually, it looks like it was, let's see, 235, 45, 56. Okay, so these look like they were, even though they're on the bid side, it does look like they were going up. The bid was going up while the stock was going up, and they were getting hit. So it looks like they did buy these, and it looks like they did buy them, but I would need to go back and look at the history to see if they actually sold them first at the 110s.
Okay.
So if they sold them at the 110s, I'm not sure if these were the ones that they actually been buying, but we'll have to report back there. This is, you'd have to go. You go back to the history. You look to see whether this was bought. If it was bought and now they're coming in to buy again, that's a lot more interesting.
Right. Okay.
Alrighty.
Cool. Let's get a question from Mark from yesterday.
Sure.
I'm saying it in chat because I can't post it. It's a bit too long.
Okay. I put on this trade in the Tesla to buy a put at, and then sell in the next two, 400, 350 to buy the stock. If it doesn't work as an option, but is this considered okay to buy stocks? Yeah. I mean, yeah, it's very good. It's like a 1x2 to the downside. I'm wondering what you paid for that. Let's just take a look. So this is, essentially what we're doing is these 1x2s where you're basically the 500. Let's go to Tesla chart. It's basically a way to play a little bit of a downside, but knowing that if it gets lower, you're happy to own the stock at a certain level. So we have Tesla here, and it's Marco, just read it to me. It's the 500, 400, 350.
Mhm.
So it's the 500, 400, 350.
Yep.
Okay. So let's just assume the 500 puts. You're going to buy the 500 puts. You're going to sell the 400 and 350s. I don't know how long you went back. It might have cost you a little bit of money, but at the end of the day, if you did it,
He said he paid 425.
425. Okay, so okay, you paid 425. Perfect. So where do you get long the stock? Like, where do you break even? If the stock crashes, okay, so 400 and 350, the average here is 375. So you have a 500, 375, 1x2 essentially. Buy one put, sell one, and one of these, sell two. So on average, sell two at 375. So that would be about 500 and 375 is the difference is $125. I subtract $125 from 375, gets me to 250. So basically, I'm buying the stock at 250. Okay, I have to own Tesla at 250, and I paid $4 for it. I paid $4 for this. If it gets to 250, even though it crashed and you had this put spread and this whatnot, you make zero money. So you got to think about that. So if it goes from 630 and crashes down to 250, you make zero money on this trade. Okay, where you make the most money is if it goes to 400. Right, you will make 500 to 400 is $100. That will close at 100. You paid 4, so 4 times 96 over 4 is how much? 19 to is that right? 19 over 4 is 24 to 1. So about 24 to 1, about 2,400%. It's got to land at 400. And I don't know how long you might have done it to January or something. Looks like maybe a little bit longer term, but these trades are I like them. I actually like them a little bit closer dated so that I'm not basically if this makes a move and we're expecting that or we're saying that the probability of a big move can happen in the next call it week or two. Let's call it the next 5 weeks. If Tesla goes from 600 to 400, this trade is probably going to be down money on a mark, to be honest. The 400s will explode. The 350s will explode. Net, you're not going to make that much money if it happens in the next 4 weeks and you have a January. So in these types of trades, the expiration that you choose matters, Mark. Okay, so it matters.
Says it's May.
It's May. So that's pretty good. I like that. Yeah, that's good. And you paid $4 for that? That sounds great. Actually, that sounds great. I actually just thinking about it, that sounds great. And I have to look at it a little bit further, but basically you're playing for a move down here in this pocket. And if we get back to the 400, yeah, it's perfect. I like that. I like that trade. And then you know what? The risk is you got to get long the stock at 250. Okay, there's probably worse things. The whole world is ending if Tesla's down to 250. I'll tell you that much.
Right.
Okay, so at least your problems. It's like to get long Tesla at 250. So I like that trade. I like it. But that is if you're thinking about an area that you'd like to get long, that might be the trade where I can get long and still make a little bit of money on the downside. The flip side, somebody might say is why don't I just sell the 300 puts or whatever, the 250 puts or the 300 puts, whatever they are. Why don't I just sell them and just collect the premium? Here, I'm paying $4 and it has to go down. Here, if you sell the 400s or 350s, you're collecting that premium. That's the flip side. Somebody might say, I can collect, but I like that trade because if it only costs $4, it's a cheaper way to actually play the downside. Cool.
Nice.
What else?
Love it. What other questions do you guys have, if you have any? And then one more thing I want to ask you all, and let me know in the comments, is Felix and I are thinking about leaving the stream on for 5 more minutes after we finish, so you guys can chat, you can talk to each other, and then we can also interact after we're done. Let me know what you guys think about that, and if you would like to see that.
Yeah, that's a good thing. A couple minutes each day is not going to hurt. So why don't we look? It's 2:00. I would say watch the end of the day. Watch the end of the day today. Remember, we're looking. it's like this monster, right? We're looking for his footprints, right? So we hear we hear creaking on the wooden floors. Somebody's in the house. Is it the monster, right? Is the monster here to like knock the market off its behind? You know, this is, we're watching. We're watching. What can I say? We're watching. We want to see the spies. If the spies are down, TLT's bid. He's back. Day 3 days in a row. It's T -3. He's going to be here likely until next Wednesday, which is March 31st. Okay, so keep that in mind. That's what we're looking at. That's what we're looking for. You can play that. You might be able to even throw in a day trade if you want and say, 2 o'clock, 2:30. Look, we're at 2 o'clock and the market is coming off its highs again, just like it did the last 2 days. What's bonds doing right now? Let's just take a look at while we're here. That is my mistake of the day. I cannot get it right on the first time. TLT. Okay, and let's look at we want to look at minutes. 1 minute. So bonds at 135 look like they caught a little bit of a bid here, a little bit here. 140. Let's see what happened with the spies. And 145, it looked like it started coming off here. So here you have it. It's like 145. Maybe this is the turn, like it's turned every day. If you just look at the SPY, let's go 10 minutes. These are the last few days. So yesterday, right at 2 o'clock, started turning down for the day. This is 2 o'clock, started turning down for the day. This was at 3 o'clock down for the day. So what's going to happen here? I don't know, but if it's the same thing as the last 3 days, if this is the monster, all right, he's the rebalance monster, and it's likely he's coming in. That's his MO, right? We figured out his MO. It's pretty simple. And let's see what happens, at the end of the day today. Again, people bought all morning, all the day traders, 384, 385, 386s. Now, a lot of them have sold out because they've lost money. On average, those were trading at $2. They were trading down to 70 cents about an hour and a half ago. Okay. So something to keep in mind. Again, if you're trading this market, that's something you might want to take a look.
Cool. Perfect. Awesome,
right.
Felix.
All right, good. Listen, have a great weekend, Marco. Be good.
Thank you. You too. Thanks, everybody. Bye.